Okay, ladies and gentlemen, welcome to this the Tax Reform Act meeting. This meeting is actually targeted to review and summarize everything about the Finance Act and what might be your question or something that have been bothering you. So just to clarify so many things for you and to simplify it as well. So my name is James Olashori. I'm the managing partner of Olashori James & Co. into tax, audit, and accounting. So first, let's talk about the Reform Act. So the Tax Reform Act in Nigeria is actually designed to amend the Nigeria tax system, especially through the Finance Act 2019 up to new or the latest Finance Acts, and also to modernize the tax system in Nigeria so that it can improve the compliancy and also boosting the government revenue. That's the two major areas. Okay, so this Reform Act actually affected so many laws, so many acts. We have different acts for different taxes. So it's going to affect the Company Income Tax Act, the Personal Income Tax Act, the tax income, the value added tax, the petroleum profit tax, the stamp duty tax, the custom and SI tariff act, and so many taxes that it's going to affect. So before we move on, let's quickly check our agenda for the meeting. So today we are going to be looking at one, what is reform? So on 26 June 2025, the President of the Federal Republic of Nigeria actually approved 4 major bills, collectively referred to what we call what? The Tax Reform Act. And the 4 major areas are: number 1, the Nigeria Tax Act 2025, we call it NTA, the Nigeria Tax Administration Act 2025, NTAA, the Nigeria Revenue Service Establishment Act 2025, and then the Joint Revenue Board Establishment Act 2025. So these are the areas that the Reform Act actually affected. Now, what are the key things or keynotes you should be looking out for today? 1, these laws essentially repeal and consolidate. When you say repeal, it means it replaced. They removed that and replaced another one, and consolidate a number of outdated tax statutes, such as company income tax, the capital gain tax, just what I said now, into a unified framework, just like a one bucket that will control everything and modernizing Nigeria tax system and then tax administration architecture. That is first thing you must understand. The second thing you have to understand is that the effective date. The effective date is 1st of January 2026, except if the state otherwise. So the new regime is scheduled to take off from 1st of January 2026. This means that there is a window of time to review your business structures, tax compliance framework, and processes ahead of the implementation date. That is what you need to do now. And that is the reason why this video is going to be very useful to you, because you need to start planning ahead before the time actually arrives. Now, what are the key changes of which you should be aware of? Number 1 is that the small company relief and the definition of changes. So let's start with definition first. Before, when we say small company, it means your revenue, your turnover, gross turnover is below 25 million naira. But now, the definition of small company is now has changed. It's now from 50 million naira or less. 50 million naira. When it's less than 50 million naira, you are a small company. So the threshold now is a bit higher compared to the previous one. Another factor that you can see is when your fixed asset is not exceeding 250 million naira. This is your total asset. Your fixed asset. When you look at your fixed asset, you calculate everything together, it's less than 250 million naira, then you are a small company. And if you're a small company, congratulations, there is what we call small company relief for you. What is the small company? Before, when you are a small company, you are exempted from VAT, you are exempted from company income tax, you are exempted from what again? So many things you are exempted. The same thing apply. So it's like they are encouraging the small business to also grow to a level. Do you understand? That is what that part is actually for. Now, may now be treated as small company and be exempted from company income tax 1, capital gain tax 2, and the development levy. We are going to be talking about that development levy when we get there. So the threshold previously was much lower. So many more entity may become eligible now. So the threshold before was very low, but now it's now even lower than the previous one because this is just 50 million naira. Once you fall below this, you are safe. Okay. Now let's move to the second one. What is another change you need to take note of is the capital gain tax. What do you mean by capital gain tax? That is when you dispose your asset and there is gain on that disposal, you are supposed to pay tax on the gain on disposal. That is comparing the sales proceeds to the tax redeemed down value, the what we have. By the time you compare the two together and you have gain, then fine, you are going to pay what we call the capital gain tax. And previously it was 10%, but now it has been increased to 30%. What is the implication? Once you are a big company, it's like you are in trouble. Don't let me say that, Washa. Because what's supposed to enjoy at 10% before is now at 30%. But the thing is that if you are a small company, you are exempted. You are free. So align it more closely with corporate tax. So CGT is now triggered on indirect transfer shares in Nigeria companies. So file offshore. I'm going to explain that file offshore. Now, what we are saying is that transfer of share. That is, even before, if you disposal of shares, there's also what we call the capital gain tax at 10% on it. So now transfer of share in Nigeria companies is also exposed to what we call the capital gain tax. And when you say offshore means maybe you have company that are foreign company. Okay, you have foreign company outside Nigeria. So basically offshore is activity or entity located or registered abroad, typically for legal or tax investment reason. Okay, so they register abroad, the entity is operating abroad, but they have like a maybe subsidiary or parent in Nigeria. So an offshore company is a business registered in foreign country. Okay, but it usually conducts its business outside that country. So you are an offshore company. Okay, so now what they are now saying is that either is intermediary holding companies or offshore, the capital gain tax is now what? Is at 30%. Now, let's move to the next one. Introduction of development levy. A new levy of 4% on accessible profit. Before, we used to have what we call education tax. Before it was 2%. It was later increased to 2.5%. It was later increased to 3%. Now, this education tax is now going to be removed with other what we call IT levies and all this levy. They are going to consolidate everything together and call it development levy. That development levy will now be at 4%. So profit before tax, depreciation, and losses applies to companies that are not classified as small company. It means if you are under small company, praise the Lord, you are still enjoying. You are free. Only the company that is having above 50 million gross over, then they are classified and they are there to actually actually comply with this particular law. Okay, that is clear. Let's go to the next one because of our time. Okay, the next one is the minimum effective tax rates and top-up tax. So entities that are part of multinational enterprises with global turnover of 750 million, or companies in Nigeria with turnover of 50 billion will face a minimum effective tax rate of what? Of 15%. So there will be additional top-up tax. And a top-up tax may be imposed on Nigeria present company foreign subsidiary who have paid tax below the 15% effective tax rate. I think that one is clear for all the companies that they have the Nigerian parent company and foreign subsidiary. Watch out for this. Then the next one is VAT, digital services, free zone, and indirect taxes. So the reform include mandatory invoicing and fiscalization for VAT, broadening zero rating, full input VAT. I've done videos on input and output VAT. You can go and check my YouTube channel. So recovery in many cases. So free zone companies tax incentive being reversed, and tax exemption on exports to the customs territory will no longer apply or will be phased out entirely from January 2018. So 2028. You still have enough time to plan on that area. But the major thing you should just take note here is that there's going to be a total VAT e-invoicing. Everything will be digital. We don't want to be going up and down with paper and everything again. Everything will be digital, and get ready for that. The next one you'll be interested to know is the personal income tax, payee. And let's check that now. So for individual lower income earners, for example, incomes less or equals to 800,000 per annum. That is, by the time you divide 800 by 12, I think that should be around 70. If you are getting 70,000 per month, then you are exempted from payee. Anything above, you are already exposed to payee. We are going to see how we are going to calculate that now. Before, the minimum wages was 30,000. So anybody getting around 30,000 below monthly is exempted from payee. But now it has been increased from 70 to 70 because the new minimum wages is now 70,000. So may now be exempted from personal income tax. Global income for Nigerian residents is more clearly within the tax net. That is the non-residents now. So employment income may be taxed if duty performed in Nigeria. Okay, so you look at the residents, the global income for Nigeria resident is more clearly within the tax net. So, if you are having different income from this state, from this country, from this, you put everything together. And then, so you are going to see the way we are going to see the tax rate after this one. Let me quickly talk about the tax rate, then I will come back to this later. So let's go back to the tax rate. Now, before, this is our tax rates on the company and on the personal income tax, the payee. So the first 300, you have 7%. The next 300, you have 11%. The next 500, you have 15%. The next 500, 19%. The next 1.6 is 21%. The next or above, anything that is left and above will be on 24%. But now, based on this new Reform Act, everything is now changed. If you are getting 800,000 per year, you are not paying any tax, it's zero. If you are getting 2.2 per year, will now be what? 15%. If you are getting 9 million per year, that will be what? That will be 18%. If you are getting 13 million per year, that will be 21. If you are getting 25 million per year, that will be 23%. If you are getting 50 million, no doubt, and above, that will be 25%. And that is how the new tax rates is going to look like, the annual. Okay, that's how the annual is going to look like from 1st of January. So I'm going to do a video on how to do the calculation on payroll. We also post it. You can watch it later, and you can subscribe so that when the video comes or drop, you won't miss that as well. So we move to the next one. The next one is talking about the tax administration. Okay, the tax administration. Now, the establishment of the Nigerian Revenue Service, replacing the current Federal Inland Revenue Service with expanded mandates and an emphasis on digital compliance, transparency, and enforcement. So the name have been changed. The name was what we used to know it as Federal Inland Revenue, but now the name has been changed. And this now increase and expand their, their mandate, and then make it more transparent. Enforcement is giving them more function to do, and also more duty to perform. Okay, in that regard, I think that is clear. That is not new to us, in case you are just hearing. Now, what this means for your business, this is where the CEOs, the business owner needs to listen now and take note of this. Okay, what does this mean for your business? Number one is that you have to review and map your business structure. If you are part of a large group, that is, you have revenue that is more than 50 million per year, your turnover is more than 50 million, or your asset base is more than 250 assets, then you have to take note of this and pay very good attention. Or maybe you have offshore operation. Maybe you have other business that was registered outside and operating in another country. Or you have a subsidiary. You need to assess whether you fall within this minimum ETR or top-up tax rules, or whether you currently transfer pricing, interest, deductible group, financing arrangement will require revision. You have to call an expert. We are also available for you. You can contact. So let's call an expert. Let them look at your financial statement, review everything for you, and put everything on the right track, because the way the tax is going to be heavy. Okay, then the next one is check eligibility for small companies exemption. If you are under small company, look at it, your record, look at your information, and see maybe you are exempted from all these certain rules. If your turnover and fixed asset base fall within the new threshold, you may benefit from exemption from CIT, CGT, and development levy. Congratulations to you. Now, assess the impact of the development levy. For companies above the small companies threshold, incorporate the 4% levy into your profit forecast and tax planning. If you know you fall within these people that will be paying the 4%, that is, you are not a small company, then quickly plan ahead and start making budget for that 4% into your what? Into your accessible profit. Accessible profit doesn't want to know maybe you make loss or not. You are going to pay the 4%. That one is sure. Okay, because it's going to be based on the accessible, not on the profits or loss you make after the adjustment. The next one is update your compliance process, because the administration will be more stringent. Okay, invoicing Fiscalization, digital reporting, stronger penalties, everything will be ready. They are ready for you. That's why they are even getting more, they are recruiting now so that they will have more hands on desk. So you should ensure your tax compliance system, documentation, internal controls are robust and up to date. You need a professional to do that for you. Okay? And after that, there's another part you also need to take note. Consider the transition planning before 1st of January 2026. So as the new act takes effect from 2026, you have a window to plan. Consider pre-year and end actions, timing of transaction, asset disposal that may trigger CGT. Make sure you have done everything before 1st of January so that you will escape all those things. Review of group financing and update of tax policy, internal procedures. All these things have to be in control, in place before 2020 so that at least you can escape some part of it. You have to plan ahead. Then free zone operators. If you operate in a free zone or export business, analyze how the changes affect your incentives, status, and any phasing out of benefits. So you have to know if you are going to be missing some benefits before then. Personal and payroll matters. You need experts to design the payroll for you, and we can do that for you. So for individuals, key staff, expatriate, etc., ensure that you review how the changes may affect the personal income tax, benefit in kind rules, and all this global income exposure. Make sure you check and make sure you put everything in place. If your staff are collecting 800 per year, if you know they are getting more now, you know that there's going to be more taxes. And the more the tax, the lower the nets they are going to take home. All these things must be in plan from now. Then communicate with stakeholders. If possible, share this video with your staff, with all your people. Let them listen and get ready. Let them be exposed to what is coming. Communication with stakeholders. When you say stakeholders, mean anyone that has interest in your company, especially your staff, your management, all those people. Ensure that tax-related changes are communicated with the board, senior management, finance and tax teams, and any affected business unit. The branch operation, the export, make them be aware, train them, let them go for training. We also organize training that can help them. At least we equip them to function properly, and whatever they do can actually save your business. You know, what they learn will save your business a lot. What are the important awareness and the risk points? Why the headline tax rates? Make sure, just take note that the tax rates, CIT is still at 30%, remain. So the effective tax burden may increase because of the development levy. So the only thing that can make it increase is the development levy of 4% that is phasing out the education tax. Then the minimum ETR top-up regime is also coming. Then the CGT, when they dispose asset of at 30%, is also coming as well. If you are not a small company, I believe you know the meaning of small company and not small company now. Non-compliance risk is heightened. The new acts bring stronger enforcement, digital force compliance, increased penalties, and expanded audit risk, especially for multinational groups. So you need to be on your toe now. Transfer pricing, financing arrangement, interest, deductibility, cross-border group structures are under tighter secrecy. So they are going to be checking everything very tight now. Okay? But nothing to be afraid of. All you just need is a professional to undo all these things for you, and you are good to go. So for any major transaction, asset sales, share disposal, restructuring, the CGT regime and indirect transfer rule may trigger tax liability where previously they did not. So selling and disposing assets now, you know, anything gain on it is at 30%. So you have to be ready for that. Okay. And you have to be careful of what you are transferring or you are disposing. Then free zone and export-oriented business should review incentive eligibility and the phase out or modification of exemptions. You just have to know, depend on your business or whatever you do. Also, as with all major reforms, there may be transitional uncertainties, regulatory guidance pending from the authority, and varying interpretations. Hence, proactive engagement and documentation will be what? Will be key now. Okay? It will be key. You have to plan ahead. And the final tip before we round up, because I don't want this video to be too long, I just want it short. Please feel free to contact us anytime you can schedule a meeting. We can come to your office, you can do it online. If you want more videos like this, you want us to train your staff, you want to get more clarity, we can actually do that for you. So this reforms specifically affect your business, or what steps you think we can take together. We appreciate. You can. Thank you so much. So to remain Olashore James and Co. You can check us on the website www.olashoreJamesCo.com, or you can call us. You can search on Google to get our contact information, our website, and we are already here for you. So my name remains James Olashore Olagoke. Thank you very much for listening, and make sure you share with your people. Thank you very much, and God bless.